When you're not sized properly, it is way too exciting. And you cannot be Mr. Serenity if you do that. Because I think most people only have a piece of, or a couple pieces of this, and they don't realize how involved trading can really be when done extremely well. And I think the first thing up here is you got to figure out what kind of portfolio you're going to actually trade. And we're going to talk a little bit about that. And that's why I have the items are in red I'm going to talk about. I'm going to say a little bit, brief little thing about simulations. I'm going to talk about buy-sell engines, which is what most people concentrate all of their time on. And this is how we buy, how we sell. You know, whether it be a dungeon channel or a moving average or a discretionary decision, everybody needs a way of buying and selling. And that's where everybody seems to spend a lot of their time. But something that's even more important than that is down here calling sizing your position.
Actually observe this tendency that during normal market conditions, the correlationship might be less correlated, but in like when macroeconomic situations happen like this pandemic and this sudden crash itself, everything becomes either positive one or negative one in a way.
That's exactly right. You can traders always ask me, Tom, would it make sense for me to look at the correlations of all these different things I'm going to trade and pick ones that are low correlated? Sure, but realize that when the world looks like it's coming to an end, you know, the pandemics and the war breaking out in the Middle East and anything else, everything will be correlated either 1.0, minus 1.0, and there's no place to hide. So you got to have other protection mechanisms in place for that. Don't just rely on diversification. That won't be enough.